Well, hello and welcome and welcome and hello. And I am trying to send a text, which is not a good way to intro a show. But anyway, guys, it is what it is. Going to be a quick one, a quick and dirty little midweek hump day spectacular. It's Un Poco Mas. Danny Deals here talking SoFi Technologies Incorporated. Ticker symbol is SOFI. Sorry, guys. Started you out with the shared screen there. SoFi on the day is I should have just kept sharing my screen. There's no reason you need to see my Wednesday face. Haven't had any Botox or anything in the last 48 hours, so things are really a mess. But in any case, guys, welcome and hello and welcome. Hope everyone is having a good week. I know it I know if you take a look at what's going on, it looks like, doom and gloom. SoFi down. Obviously, the NASDAQ down 500 points, 3%, getting completely hammered. But what you notice is the Russell 2000 only down 0.5%. The Dow just less than 1%. So obviously, the big tech names are getting hammered. Google, didn't have outstanding earnings. Obviously, people were very disappointed in the Tesla print. Wasn't actually too bad. I mean, you have to expect margin pressure with the level they're discounting, and demand is just down, I think, based on the really high interest rates, all that type of thing. And plus, there's just a lot of competition. So I don't think the Tesla, I don't think either ER was particularly shocking, but I think these companies are just, considerably overvalued. As they say, the valuations are frothy. That's what they like to say. Instead of just saying, hey, it's just grotesquely overvalued, they say, the valuations are frothy. I think with Tesla, it's a very unique case because obviously they're talking about full self-driving being approved, this year, potentially in different provinces in China. So if they're able to start getting revenues based on taxis and robots and stuff, that's a complete game changer versus just the vehicle business. But that hasn't happened yet. So it's completely speculative whether or not those things will actually take place this year. If you're a long-term Tesla investor, as I am, you will note that their timelines are not always accurate, to put it mildly. So in any case, guys, we're not talking Tesla, we're talking SoFi, but we are talking overall market. And if you're looking at why there is just a sea of red out there, the Tesla ER is a big thing because Tesla drives a lot of like retail activity, obviously, in the market, and people selling off Tesla, they're moving to other things. Obviously, it's not stocks right now. But if you take a look at the FinTurds, guys, Upstart is down 8%, growth stocks, Palantir down 6%. I think Palantir is just way overvalued at this point, but that's just me. Coinbase being down, that must mean Bitcoin is down just a little bit. Lucid down, Affirm again down 8%, PayPal down, Visa down 3.5%, MasterCard down, American Express down. So SoFi is actually holding up better than any of these other fintech neobanks. And I think what I'm trying to, there was a comment on the last video, somebody said, I think it was Gilgo Beach Slayer, if I'm not mistaken. It's like he's buying puts, and he's basically, and I said, well, why do you think guidance is going to be weak? And he said, no, I'm not necessarily think guidance is going to be weak, but the stock just always sells off after the ER. And, that's a very, he's right. Basically, it either runs up if it's really good and then sells off, or it just sells off and crashes. I mean, they really sell this off no matter what the ER says. And that's what's so vexing. That's what's so frustrating to many of us, SoFi bulls, is that it doesn't seem like it. It is the fundamentals, the performance of the company have been, completely disconnected from the stock price because mechanics are on the stock, shorts are on the stock. And that's just the way it is, guys. We can't move markets. I mean, very, very few cases like, GameStop or something where retail actually acts collectively like the market makers always do. And I know collective action is collusion, quote unquote, is supposed to be illegal, manipulation, all that. But, let's be real. These stocks are controlled by market makers. They decide where they go. They make the rules of the game. They drive the bus. All we can do is get our money on and off the bus when we so choose. Anyway, guys, hope everybody's doing great today. Welcome and hello. want to thank producer extraordinaire, not a lurker, J Money. Would like to thank Alberto Bertie Avilés, wielding the wrench with fairness, stern. He's like the Russian secret police, stern but fair, at least according to Chris Pontius. We got Her Tweet Cat. Don't sub and like. You're absolutely right. Sell off. Please do a $30 price tag. What's up, son? How you doing, Alberto? You are my biological. I thought Anthony Noto was my biological father, but maybe it's Alberto Bertie Avilés. SJ Tavares. What's up, SJ? Let's fucking go. I completely agree with you. Where are we going? Hopefully it's to get a nice burger, nice double cheeseburger, perhaps a nice espresso, double espresso latte with extra 2 shots. M. Russo bought at 721. Yeah, guys, good, well bought, M. Russo 215. It actually dropped, I believe, all the way down to 715 today. Yeah, really hit it off the, ran up a little bit to 747. It loves that 747 number. It loves the super jumbos. And then sold off like in a matter of minutes all the way down to 715 from 750. So these, the mechanics are on the stock, the algos are on the stock. It's been pretty flat. You can see from the volume in terms of the algo working really hard, but they're, you have to believe there are some orders, some accumulation coming in. This is the pattern we've been seeing with SoFi. It used to be sort of that mountain and hump, and this is basically the modified mountain and hump. They suck you in right at the beginning, sell it off completely, create panic, stop people out, just massive fear, and then sort of reaccumulate slowly the rest of the day. But volume's pretty strong today, already 21 million shares. I think that's just about as many shares as they traded yesterday. Let me get you guys a check of the live short interest. I know you turds live for that, although intelligent people like Luke who say, this stuff doesn't make any difference. Shares on loan way down. This was just 260 million. Now it's down to 210. They're basically saying the shorts are returning quite a few shares. Short interest dipped down below 17%. But remember, they used to come into ERs 10%, 11%, 12%. Net borrowed change looks like 1.2 million return today. Cost to borrow average 0.97. At least they're not paying people to short this stock today, but lots of shares available. Almost no cost to borrow. So that's why they can just stay on the stock and manipulate it any which way they want, because there's no cost to borrow the shares. There's no cost to short the stock. And that's just, there's a big share count, it's a big float. Institutions haven't locked up enough of it. They have about 460 million shares. There's 800 some institutions in the stock. So there's a good sentiment there, but there's a lot of shares. They're always diluting. And it's just the nature of the SPAC vampire shares. Any of these companies that created SPAC, they just printed a hell of a lot of shares. And all the people that created the SPAC got a bunch of shares for doing nothing. Basically some paperwork. And then, the SPAC system, I don't think is really the best way to get to market. But the IPO system, I think, is corrupt too. I mean, look at these IPOs. Some of these IPOs you got on SoFi. It's like things run up and then the garbage just sells off. So, it is what it is, guys. You have to decide what you buy. You can't get too caught up. Is it a SPAC? Is it an IPO? Is it a new company? You have to just buy what you think is a good value. I mean, you have to, and if you're buying a growth stock, you're buying in growth, you have to look at that growth. I mean, this kind of brings me to my rambling point of my video, which is what will cause the stock not to sell off this time? What will be sort of the game changer? Is SoFi at that tipping point? A la It's Always Sunny in Philadelphia. The gang reaches a tipping point. Is there something that could happen in this ER that makes it different? Obviously, it wasn't GAAP net profit. I mean, that was not the game changer. People are saying S&P 500 inclusion. That's going to be a little bit ways off anyway. Is there something this ER that would basically cause a sustained increase in the share price to where we feel fair value is, where Morningstar feels fair value is, where people like Jeffries, Mizuho, who, do the analyst days, actually do the hard work. One of the things that was just abundantly clear when I listened to Bologna, is that he has not sat down with management to have his questions answered or done any like meaningful analysis. He's like, I'm a numbers guy. I really like to go inside the numbers, but he found the numbers so confusing. That was the thing. I mean, it was like he couldn't wrap his head around what's actually happening with the company. It was just bogged down in this circular minutia. So just to get to the point, guys, because I don't have a lot of time. I have a ton of big dog work today. It's a Wednesday, guys. Yeah, grab your ankles. But so Galileo accounts. This is what I think is kind of going to be the barometer, because they can't announce, exactly who they're talking to. They may not even be able to disclose who their customers are, at least not right away. It probably becomes obvious over time because there's just too many clues. And then, people put out PRs and different things. But in the lead up to that, you have to listen to LaPointe. So they've just been adding, it's very sort of measured. This was kind of the transitional year, 2023. The accounts actually went down. They jettisoned some of these accounts. So grown steadily up until this point, and then kind of flattened out here, 126, 129, and then growth resumed. 8 million accounts, 11%, 10%, 11%. And then this was a really nice jump of, 20%. So the growth basically increased quite a bit in the last quarter. And that looked pretty good, but this is not dramatic enough. This is not the kind of graph that's going to say, okay, the stock's going to take off and just catch fire and run away. It's going to sell off on these. And that's exactly what happened. Obviously, the stock sold off back down to low sixes, re-shorted, et cetera, et cetera. But if you notice, shorts have been really, really shying away from the SoFi stock. The last, say if you look at the last, 10 or so trading days, short volumes dropped from 40s to 30s, 38, 35, 36, all the way 30, 30, 32 down to 28. And picked up a little bit this week, last Friday, 37, 35, and then yesterday again, 41. So, there's a little bit more activity. Obviously, if you watch Jimmy Chitwood on, I forget the name. God, I forget the name of his channels. I'm so old. My memory's terrible. But Trending Stocks, I think, is the name of his channel. He's talking about there was actually some institutional selling, which, you can note here in the filings. There was just some companies, some of these filings were selling some shares, all shares, Pro Equities sold out of stock. I don't know how many shares they had. I'd have to, you have to look back, but Longitude came in. They have an average price of $17.39. They increased their stake, so averaging down. But overall, the sentiment is positive, because even though the Qataris sold, I think, dumped 20 million shares on the open market, still institutional ownership inched up by 2 million shares. So that means those were definitely bought up. And these are really good institutions you want in your stock. The top guys, Vanguard, BlackRock. These are institutions with unlimited money, the deepest of deep pockets. And I think one of the things that's gone on with the stock is they haven't been punished for driving it down, shorting it. They've been allowed to churn, cover, accumulate. No big players like a Vanguard comes in and, I'm going to buy, an additional huge percentage of this company. No institutional players coming in and says, I'm going to buy 9.99% of this company. I think it's that compelling a value, because these institutions will eat their own. So if they saw SoFi as that compelling a value, you would not see institutional ownership down below 50%. So Mr. Market just doesn't believe it yet. And what would convince Mr. Market? Mr. Market is a stubborn, obstinate son of a bitch when it comes to this stock. I think you need to go from 6 here to like 20 million ads. If this number jumps to like 170 and you see this graph just go up dramatically, I think you're going to see sustained, because that's what everybody's looking for. They're looking for that growth in tech. They're looking for confirmation that Galileo and Technesis are working. There's a synergy. They're going to get customers. They're going to sell this software. They're going to make high margins. The market just doesn't believe it yet. Derek White believes it. Chris LaPointe believes it. But Mr. Market doesn't believe it, or they're just using it as a pretext to continue to attack the stock. The other thing that's going to be important, as it was last quarter, is guidance. Guidance needs to be very, very strong, and there's certain elements to that. LaPointe talked a lot about the Mizuho. He really focused on Wyndham. He really focused on home loans and lines of credit, VA loans. These things are all being added. Very little of this is factored into any analyst guidance and really SoFi guidance. There's so many things that are going to come to pass before 2026 that are not in any guidance at all. So Dolev asks LaPointe, why are you so confident in this, 55 to 80 cents? He's like, we're extremely confident in that number because nothing new is in there. And we have a lot of stuff in our pipeline. He's like, this number is a joke, basically, if you read just slightly between the lines. So he's talking about, I don't want to read this because I know you guys have read this. He's talking about GAAP net profitability. And then he's talking about, how do you get there? Your CAGR through 2026, looking at mid 20s. And this is basically what he's talking about. Galileo. And this is the key to the valuation of the company. This is the entire key if you are an investor in SoFi. And I would suggest you read this, and I would suggest you understand it, because the folks that say, hey, I just don't understand tech, this is not going to work. People are not going to do it. And the argument like that Gary Bullum-headed douche was making is like, hey, because Capital One is investing a lot of money in their own technology, it's really not viable. It's not a business. I don't understand it. Management is misleading you. I read one paragraph about it and my old, dumb, dusty head exploded. No, not really. He's a very smart guy, math guy. But it's just, he's trying to equate this with like some calling card business from the 1970s. This guy's stuck in like a Serpico French Connection mentality where, you have Gene Hackman wearing a little Popeye Doyle short brim cap, chewing gum, just attacking people. A badass Gene Hackman. The Gene Hackman from Hoosiers that attacked one of his own players, got banned from coaching college ball. Had to go strike up a relationship with a Marmish Barbara Hershey out on a farm somewhere. It's not easy. It's not easy, guys, especially if you're an ugly man. Like, no offense, but Barbara Hershey's, pretty good looking actress. So you like Gene Hackman shows up. I don't know. It's not like you just fall for this guy because he beats up a student and, he's a good basketball coach. I'm not buying it. But I don't know. I thought of Hoosiers because I was going back to Jimmy Chitwood from Trending Stocks. I don't know if Trending Stocks is Canadian. He seems like he might be from the Midwest. Anyway, guys, Versa Tennis Clips is here. Let's go. How's it going, everybody? So this is what I wanted to focus on because I want to say, how does the stock not sell off? How is it not a good idea to buy those puts? So this is here we go. So I'll hit on tech platform first. We're confident in our guide. What we expect in the mid 20% growth is large installed base of customers that are growing quite nicely already today, over 150 million accounts. Listen to this part and just take it for what you will, and then look at the average customers that are coming on board with each new client on the platform. We have dozens of customers that are in various stages of integration or in early stages of revenue monetization that you could expect to see continued momentum and growth over the course of the next several quarters and years. And then, as we've talked about over the course of the last several quarters, we're targeting partners that are large financial institutions who need to modernize their tech stack, or large brands that have big installed bases who want to get into financial services. On the latter part, we're seeing very robust demand. And I'm going to talk with my hands here. I'm going to gesticulate for effect, for your enjoyment. If it enhances your understanding, that's wonderful. On the latter part, we're seeing very robust demand and are in great conversations with a number of top banks in the US and top banks in Latin America. I think part of this is a function of obviously our product offering and differentiation, but what you're seeing is the broader banking sector, a severe need for financial institutions to have much better real-time visibility into managing their assets and liabilities. And as importantly, their products need to work better when they're used together. So we're in a prime position to be able to offer that type of solution. We are in RFP discussions with many of the top US banks right now. Those conversations are going extremely well. Obviously, as we're focused on larger customers that have more durable revenue potential for us down the road, the sales cycle is a bit longer. It can take 1 to 3 quarters to sign up a client. Then integration takes longer than that. So you're talking, 3 quarters plus at least 3 quarters, year and a half, 2 years at least to really get a customer to revenue. And then you start generating revenue. But what I would say is with these larger, more established businesses, we're getting into a meaningful scale of revenue much faster than we used to when we were focused primarily on neobanks and fintechs. So they don't have to grow the customer base over years with these tiny nothing burger companies. They're going after the big fish. And it sounds like the point is saying they're going to start landing these big fish, and they're already in the process of landing them. So very robust demand. We're really excited about the opportunity ahead of us in a very large installed user base that's growing nicely. Hold on, guys. I got to get right back with you. Yeah. Hey, sorry about that, guys. Yeah, just so much crap going on. It's absolutely ridiculous. Um, Start earning, getting some spams about crypto trading. Um, oh boy. Okay, guys, sorry. I've got a couple real estate deals going, big deals in escrow, and just all kinds of things going wrong. And gas leaks, plumbing leaks. Oh my gosh. Most of you left. Who could blame you? But anyway, so this is the critical thing. Why might we not sell off this time? Well, one of these times, one of these big tech clients that they're onboarding is actually going to hit the books. Their members are actually going to hit the books. They're going to be able to declare that membership growth. So what if we see, 10 million, a client with 10 million members come on board, and they add those other 6 to 8 million they're going to add anyway? Boom, maybe you get 18 million member ads. Because the average client they have now is like 5.5, 3 million members, per client on the platform. But they're saying we want to get much bigger per client. So you have to believe these people they're talking to, minimum, 3 million, 5 million members, 10 million, 20. You get into these larger banks, you could be talking, tens of millions, if not more, customers all at once. So this could explode. I don't think it'll be this quarter, to be honest with you. They didn't sound that confident that Q2 was going to be that quarter where you just saw this explosion in Galileo and they slaughter the shorts. I don't frankly believe that's going to be Q2. Now, there's not a lot of aggressive options. It doesn't seem like they're, the bears are that aggressive to push the stock down. Like people are talking 6 levels, but obviously they're very comfortable pushing it back down to 725. Where are they going to go into earnings? Yeah, I thought they were going to go into earnings somewhere between 750 and 8, because if they run it up, they don't want to run it up much past 9. If they sell it off, they probably want to sell it off back down to 6. And probably want to keep it right in that range. So the mechanics can still do what they want with the stock. It's free to borrow. Retail is still weak and can be, pushed out of the stock with stop losses, with panic selling, can be drawn into the stock with FOMO, with these little false run-ups that they do on the ER. They, run it up 20%. Everybody's like, oh, it's going to double. It's going to double. The ER was great. Guidance is great. And then boom, rug pull, cut your legs off, and then all of a sudden you're selling a couple of weeks later, being stopped out for a 30% loss. So you can't really argue with Gilgo on his knowledge of history, because that is how things have gone, and history does tend to repeat itself. So that's why I'm just really cautious around the ERs, because it usually runs way up, way down, or quite likely way up, then even further down. So there's just extreme volatility on a stock that is so stable. Just quite unusual. But this is an unusual stock. They started shorting it. They went after it. They thought it was going to die. They thought it was a spec. They thought it was a scam. They thought it was just a dying student loan, black hole turning into a giant, I don't know what stars are called when they collapse, an elf's ear or something, but stigmata, I don't know. Anyway, what's up, turd munchers? Jabroni Brains is here. We have not heard from Wes. We want proof of life from Wes, but Jabroni at least is here. So we have the better half of that domestic partnership. Hello and welcome. Please stand by. Yeah, sorry about that, guys. Had to take a call. Just plumbing emergency. Honestly, it wasn't anything super cool. It's just let's see, Supernova, Dwarf Star. I'm not sure, Bobby Joe. You know, right before I do it. Yeah, I think it is. It dwarfs, and then Supernova, I think, is when it explodes, like a champagne supernova in the sky. Yeah, I was a big Oasis fan. You know, it was like, don't look back in anger. Okay, right before it dwindles into nothing. Noto just hired away to Habit Burger. He's always wanted to wear those wedge-shaped hats. Hey, they want to teach you how to make a proper smash burger. What about all those U-turders who just do nothing but like the Blackstone grills are like, I'm going to show you how to make my fried rice. Like, you just put the rice down, you put some soy sauce. Maybe your fried rice ain't coming out right. Maybe it's because, you're a hillbilly. You're an Asian. Maybe Billy Jack makes the best fried rice in the world. I don't know. I don't like to judge a book by its cover, but it's like all these Blackstone. I'm going to show you how to make a smash burger. Put your onions right here. Maybe your smash burger's sticking. Maybe you need to use a little more oil. Oh, God. There's just the content on YouTube that gets like millions and billions of views. Like, what are we watching? And then I'm like, why do people watch this? And I have to say, well, I'm watching it. Like, I'm an idiot. The rest of America is also idiots, and we just consume this constant garbage. Anyway, guys, hello and welcome. So that's what I'm basically looking for. The first half has to be explosion at Galileo. The second half has to be massive guidance. And LaPointe talked about that too. What a huge opportunity they have with Wyndham. Okay, huge opportunity with Wyndham because now they control the back end. They control everything. And that's what he talked about. If you move on a little bit down here, and they're talking about GAAP EPS, what gives them confidence. The guide assumes no incremental investments in new products, no services, no new acquisition, etc. As you can imagine, our product pipeline is pretty robust. So you shouldn't expect us to sit around and not come out with new products and services over the next several years. But these numbers assume no incremental investments in new product or launches. What we're assuming is 20 to 25% CAGR over the course of the next 3 years. In financial services, we're expecting to be 50% CAGR every single year, or compounded annually every single year. What's going to drive growth in financial, especially, is we're really excited about is the fact that more people are using SoFi as their primary bank. The deposits are very, very strong. They talk about defaults. When we looked at, noting here, if you look at the last several cohorts of new members, approximately 30% of those new members are taking on a second product within 30 days. Cross-selling, very, very, very strong. That's an important sentence there. That was just nobody really paid much attention to. In addition to that, seeing meaningful growth in deposits, more than $2 billion every single quarter. Of course, it was $3 billion last quarter. I expect it to be very, very good again. Direct deposits increasing, the sticky direct deposits, as they like to say. As you look at Q1, 1.9 billion up from 1.5 billion Q4, 1.2 billion Q3. So net interest income should be pretty strong. I think Data-Driven Investing did an analysis of this, and I think people are expecting too big a drop this quarter. I don't think it's going to be as bad as people think. They rolled out alts, and mutual funds, talking about all these new products that they're, coming out with that are really not in any numbers, not any guidance. Analysts really aren't paying any attention to. So he's talking about how are they going to hit that GAAP EPS. Now they go into defaults. Let me use your favorite word, credit blocks. I've just learned this year. So, you've been conservative on your outlook for personal loan growth. You mentioned some green lights and red lights. So internally, everything is green. Externally, you're looking at some things that make you want to be more conservative. So it's talking about, guys like Roy, who wish they'd be a little bit more aggressive, putting money out there, putting money to work, and not holding so much dry powder when you could be generating net interest margin that is positive, even given the lifetime defaults of 7 to 8% that they're expecting. So they're expecting the 2 rate cuts. Basically, everything is coming up Millhouse. Everything is lining up the way Noto thought it would, the way SoFi planned for. Defaults and delinquent accounts are well within what they planned for, and though that's going to be something the Bears are going to be able to attack, because everybody thinks delinquencies and charge-offs and all that are going to be up on the loans, and they're up across the board, but people think it could be really bad at SoFi. I don't think it's going to be people like 6.8, 6.2. I think consensus is low to mid 6s. So that's going to be something to keep an eye on, because that's going to be something that's very easy for the bears and shorts to frame and attack. But I say reframe that narrative, Anthony Noto. Reframe that narrative. Say, look, he's already just said they're still gap EPS positive. So if they make 2 cents, even 3 cents, something crazy like that, say, hey, analysts are saying 0. This nutsack at Seaport is saying 0. This, wrinkled I don't want to say it. The Chia Pet is saying 0. Everybody's saying 0. So if they make 2 or 3 cents, I think what the argument, they can just flip it on their head and say, look, yes, defaults are up, but we're still making a lot of money because our net interest margin is so big, because the spread is so big. So even with defaults up, we're still making a ton of money on these loans. These are still valuable loans. Everybody acts like just defaults going up to levels they've planned for is the end of the world. Chicken Little, the sky is not falling. Pull your head from betwixt your cheeks and rejoin us here in the land of the living. Oh, you sons of bitches. Anyway, guys, I just have a ton of work to do. It's been a half an hour. I got to get out of this turd. But what do you guys think it would take, guys, for this thing not to sell off? Billy Jack says 3 cents. He's looking for 3 cents. Heirloom Cedar is late, but present and accounted for. It's like, what does that say? Kurt, what was that guy's name? And she's out of your league. Like, Kurt is present and he is accounted for. Anyway, I try real hard. Billy Jack. Dude, Ass Face is here. Good to see you. Bobby Joe, once again, is here. Jabroni Brains is here. We're looking for signs of life from Wes. White Feather is here. Good to see you, White Feather. Premier the option is here. Is SoFi still SoFi? Until the ER is bad, a premium of the option, they're good in my book. Management can only do what they can do. They can't control the share price. They can only execute and control the fundamentals of the company. I think they're doing an amazing job at that. And I think share price will follow fundamentals eventually. I have to believe that, or else my whole world is just shattered and it's completely upside down. I don't think you can just short a great stock forever once it's making money. But apparently I've been wrong so far. Live and in person, you bet. Nice twice. What's up? We got Dice. Nice twice and Dice. He blames his parents. I blame Obama. Let's see. The rednecks are buying in Arkansas. That wasn't me. I was kidnapped. Or Tweet Cat's here, of course. Dice is here. He's active on the comments. Alberto Bertie Avilés is here wielding his wrench. Who else tries to pronounce Yeah, I try to pronounce it every time and I fail miserably. Victor M is here, thinking not a lurker. Versa Tennis Clips, Algo's taking advantage of every moment to go down. Yeah, I mean, Versa Tennis Clips, they're pushing it down, then they're accumulating. Obviously, the numbers say they're covering a bit, so they got this thing right where they want it, but they're churning it, and enough retarders, tend to sell lower than they bought, so it just feeds money to the market makers over and over again. It feeds money to the people selling options, people selling calls, like maybe you're Gilgo, you bought some puts, you think it's going to sell off. I'm not hating on that, guys. That's what's happened. I have to acknowledge reality. I have to acknowledge reality. This thing tends to sell off around either right at earnings or it runs up and then sells off. That's what's happened, guys. We've been in the doldrums for over 2 years now. So, you got to deal with reality with your investments. That's why I think it's undervalued, because they just keep executing, growing. The fundamentals are there. Mr. Market doesn't like it yet, but Mr. Market's been known to change its mind and run stocks up very quickly. Mr. Market is, can be sort of a schizophrenic here and there, short attention span type of kid. And, if Mr. Market decides likes you and wants to be your BFF, the stock could run up. If we see huge Galileo growth, the stock could run up. If we see huge guidance raise, the stock could run up. Will it stay up? Will it run away? History says no. My brain says no. My heart says yes. Mi corazón. Mi corazón. Guys, speaking of mi corazón, it's un poco más. I try to leave it all out on the field. I know many of you absolutely hate this show. Think it's just absolutely terrible, but you can't stop watching, so I don't know why you're here. Clearly, you have nothing better to do, but I appreciate you guys watching. It's a SoFi stock. Ticker symbol is SOFI. Still hoovering around that $7.30 mark. 21 million shares on the days. Algo working very hard to keep those, volume indicating candles flat. So I don't know, guys. Market makers are Max Payne was 7, so will they pull it way back down? 7, calls aren't really printing too much right now. You're making a few pennies, but they're not getting killed or anything. So people don't exercise when they should. That's just one thing about short-term, short-dated call buyers are mostly idiots going on hopium, and they usually lose all their money to time decay. When this thing pops, you got to get out. That's the thing with short-term calls. When you have to sell on that initial pop, or else you're the bag holder, you're the asshole, you're the heel, you're the straight, whatever it is. Okay, guys, I don't know where I'm going with any of this. Once again, thanks, Not a Lurker, J Money. Thanks, Alberto Bertiavales. Thanks to the rest of you for being here. It's Un Poco Moss, Sofi Stock, and Standy Deals. Blah, blah, blah.